Good afternoon, everyone. Thank you for joining and welcome to the Billtrust and Tweaky webinar, during which we will share insights, tips and tricks, and especially some latest updates regarding direct debits and how to apply direct debit successfully within your order-to-cash process. My name is Ruud, currently pre-sales manager in Europe, and my team and I use our years of experience in the field to advise and help our customers optimize their processes. I am happy to introduce to you today my co-host, Dominique.
Hello, everyone. So I'm glad to join also this webinar, and I really want to share all the experience we have with managing direct debits in Europe. So during this presentation, we will share you all the latest things, all the insights about direct debits we think that are relevant for you. So that's what we'll be talking about in the next slides.
All right, great. So the topics that we would like to discuss with you today are how B2B direct debit evolved in the past few months and years, where it's going as well. We're also touching on streamlining your order-to-cash process with direct debit. We're going to talk a bit about the unified order-to-cash process, how direct debit elevates other parts of your process within the order-to-cash. And we're going to talk about the key takeaways of today. And at the end, we also have a quick Q&A session. So feel free to use the chat to ask any questions.
So let's first start sharing the secrets that top companies use and on how to invoice their customers. With all the names you see here on the slide, they have one common interest. They want to have as least effort as possible in collecting money from their customers. So if you now have an Amazon Web Service interface, or you buy beer at Heineken, or you have a subscription with Allianz, or you have a fuel card with WEX or ExxonMobil or Radius or Total Energies. Well, all those top companies, what they do is they use direct debits in the collection of the process. So if they deliver goods, once the goods are delivered, well, they normally prepare the invoice, and then they decide, okay, now is the moment we can invoice. And that's typically what we do for a lot of customers, also from Tweaky side. We help in collecting that money from an end customer. Those brands that you see here, they all are used to do it in a kind of B2B context, where, like with the fuel cards, it's normally only a B2B flow. Mobility telco players, they also use a kind of B2B context, and that's the way we work. Now, direct debits are one of the ideal instruments to have a kind of seamless payment experience. So here you see an example of Mercedes. They can include seamless payments also already in the car. It could be a credit card, or it could be a direct debit or other payment means. We will explain later on what are the different methods available for doing automatic collection. But what we really see in the market is that there is further trends to make it as seamless as possible and don't disturb the end customer with extra actions like taking a card and so on. So if they can do it in an invisible way, that's one of the preferences. And you can do it both in a B2C context or in a B2B context. So if you deliver, for instance, goods and you use a loyalty card to buy the goods, well, on that moment, the only thing you need to do is hand over your cards. A company like Heineken, they record what you have bought, and they do an automatic collection afterwards. And you're concentrating on buying the things. Same thing with an app like you see here for parking. On the moment you do your parking event, you don't want to take a card at that moment. You don't want to take up an extra authentication mechanism. You simply want to park your car and say, okay, go ahead and collect me the money. And that's where we see that there is a huge trend towards doing it as frictionless as possible. And also in the screens of Billtrust, you have the same frictionless experience. So here there is an example where all the invoices are prepared. You simply click on proceed to payment, but at that moment, the Billtrust application doesn't bother you again with extra events that need to be take place. So that way you have really a kind of seamless experience. Now, what you see in the way recurrent payments are organized, you have in fact 3 different methods in place. The 3 examples you see here, the one at the left is direct debits. For direct debits, the first thing you need before you can start collecting money from your end customer is you need an agreement. It's called a mandate. And that's the same all over Europe. So it's the same in Europe, it's the same in the UK. From the moment you have that agreement, you as a merchant, you can initiate the direct debit. One major advantage of this is you can do an unlimited amount with a direct debit transaction. So the biggest amount for one transaction we saw on our platform in our previous years is 80 million euro. So that's already a huge amount. So look at your own figures, and if you are beneath 80 million euros, well, we can certainly do a direct debit. Second thing is credit cards or debit cards. So credit cards, they are already used a lot, in a B2C context, you see it also with Netflix. They do mostly credit card charging. Well, credit cards are often used in B2C context, a little bit less in B2B context, but parties like Amazon, they still use credit cards also for collecting money from your account if you take the services of AWS, and then they use credit cards. Same thing here, it's a bit the same like with the direct debit. You need a token to start a process, and that token you can remember, and in the recurrent context, each time you address the credit card scheme, at that moment you can reuse the token as a merchant and you can initiate payment. Of course, with credit cards and also with debit cards, the amounts are limited. They are limited to the budgets you have allocated towards a credit card. 5,000 euros, 2,500 euros, maybe 10,000. But in a lot of cases, you're really limited up until that amount. The third thing that will come up in the near future is open banking. Open banking is also based on a kind of consent. So you go to the bank environment. At that moment, you give a one-time agreement that in the future there can be recurrent transactions. It's now already happening in a couple of countries. I will immediately show some examples about that. It's also this in a kind of recurrent model. You can work in a seamless way, but the amounts are also very limited. So they are even lower than the amounts with credit cards. Now, what we would like to share with you is a bit the insight all over Europe about the utilization of direct debits, but also other payment methods, what we see. And if you look, for instance, at Germany, you see that really a lot of the payments are done with direct debits, a lot less with credit cards and with credit transfers. Same thing for other countries. In Belgium and in the Netherlands, you see also a substantial amount of direct debits. It's not so big as in Germany, because Germany is really a country with a lot of direct debits. And yeah, in all over Europe, that's really the example, using a lot of direct debits. Germany is also a country where a lot of cash is still used for the moment, while in other countries, it's really digital. So in Netherlands, it's around a bit more than 20% of the volumes. In Belgium, also around 20%. So every country has its own way of working with direct debits. So you have those different your different methods. Now, what's now typical about a direct debit is you have really a lot of reach in the direct debit context. There are 3,699 banks. The last time I looked, so it's 2 days ago, I looked, and it was 3,699 banks that are reachable If your customer has a bank account with one of those 3,699 banks all over Europe, you can reach them for doing an automated direct debit transaction. So it means if your customer is a shop somewhere, or is a hotel, or you are invoicing money from them, well, if they have a bank account with one of those banks, you can definitely collect money on their accounts. All over Europe, there are more than 600 million bank accounts reachable. So in fact, you won't have any problems in collecting. It works also cross-departmental. Ruud, can you return to the previous slide? So we see Germany, Netherlands, Belgium. So in Germany, you see really it's very popular. There are more than 10 billion transactions done every year, direct debit transactions done every year. What you see here, it goes a little bit down, but that's because the banks starts collecting the money for card schemes. They start collecting it in another way. So in fact, the volumes are really high, and the only thing, because they decrease a bit, is because there is a restructuring in the way the German banks invoice certain things. In the Netherlands, you really see that it takes up. It's almost 200% growth over the years. And in Belgium, it's rather stable, as a couple of examples. If you really want, you can ask Billtrust or Twiky to give you figures about the other countries. Also, we can share you all those insights. But we thought these were good examples for you. Now, if you look at a direct debit, well, what you will see is that a direct debit really has a kind of cost associated to it, but you can compare it also to other ones. So if you compare it to a credit card, well, a credit card is more expensive. A direct debit is a bit in between. Cash is also expensive. If you ever used cash in your B2B context, well, at that moment, you know the price of using cash. A credit transfer is still cheaper, and checks, but please take into account that on the moment you're using credit transfers or checks, you really have to count on the willingness of your customer to pay and when he wants to pay. If you use direct debit, you are collecting the money yourself. So you don't have to wait on the moment your end customer says, yeah, now I want to pay. So on the moment you have credit transfers or checks, even although the price is lower, you should take into account that the price will be much higher, because all those who aren't paying at a certain moment, well, they will introduce extra costs. So then it's a lot more expensive than the other methods. So what we consider is direct debit is one of the most effective and efficient ways to collect money from the account of your customer. Of course, when they signed an agreement. Now, a second thing why it is so cheap is because you can compare it a bit over the countries. And what I share you here is an insight over the different countries. So you see Belgium, Netherlands, Germany, and you see different prices. What you should know is if you have, for instance, a bank account in Belgium, the 3 to 5 cents is all over Europe. So if you have customers in Italy and you're collecting money in Italy, but from a Belgium account, then it will cost you 3 to 5 cents maximum. So it's the original account and your original bank that determines the price of those transactions. So in Europe, you have the scheme of SEPA direct debits. You have core and B2B direct debits. There are two different schemes, and you can use those schemes to do the transactions. In UK, you have another scheme called BACS. It's a bit more expensive, but it works only between UK accounts. And then at that moment, you're not working in euro, of course, you're working in British pounds. In Belgium, there is already a variant in place for recurrent payments, and it's called Bankcontact WIP. It's a bit more expensive. You see 39 cents, and your amounts are topped up at maximum 500 euros, and you can only use it in Belgium. On the other side, what works all over Europe and even in UK, cross-country, is Visa or MasterCard. Works very fine. So as I told, there are some extra limitations. And what you need to take also into account is that the prices of Visa and MasterCard can be quite high. For consumers, you go to up 1.8% of the amount, but if you are in a B2B context, you need to take into account that it can be going up to 2.8% of your amount plus 25 cents. And for collecting the money. So if you do an invoice of 100 euro, it will immediately be already around 3 euro. But if you do a transaction of 1,000 euros, it will be around 30. So compare that a bit with, for instance, if you do in Germany, the direct debits, it will be a lot less. Same thing for PayPal. PayPal is also a scheme you can use over the countries. It's not used a lot in B2B context. It's more B2C, but the prices there are even higher. So you have to take into account 3.4% and 35 cents, which is a lot higher than working with direct debits. Wero is a new kid in the block. A new kid in town, and Wero is now introduced by some of the leading banks in Europe. It's now first in a peer-to-peer context, but it will later on in 2026, it will be introduced also as a kind of recurrent model. And we assume for the moment, after having a lot of discussions with the people from Wero, we assume that the prices will be more or less the same as Visa MasterCards. So we think that SEPA Direct Debit is here to stay for a long time because of the prices and the efficiency. Now, there are different ways you can see those recurrent payment methods. So you saw my previous slides, the way, the cost of the different recurrent payment methods. Here, I gave you an overview on how you can address those direct debits. So if we really work with SEPA Direct Debits or with BUCS, the key element there is that you can connect directly with the bank to do the transactions. You don't need extra intermediate parties to do that. Works perfectly fine in B2B context. You take your bank accounts, you go to your preferred bank. Most of the European banks, they really want to support you in the direct debit scheme. So every serious bank in Europe does it. And when they support you, you can connect directly with the bank in a direct mode. And if you do it in a direct mode, well, on that moment, no parties are involved. But you can also use the SEPA Direct Debit or other recurrent payment methods in indirect mode. And at that moment, you need an intermediate party. It's called a payment service provider. You can do SEPA BUCS also with a payment service provider, but be aware that they will quickly add 20 to 30 cents per transaction. But you can use those payment service providers also for Visa, MasterCard, Bancontact. In Belgium, Wero will be introduced in Germany. It's already working now, a little bit in German, but in the recurrent mode, we have to wait until next year. From our perspective, we consider PayPal also as a perfect recurrent payment model. But what you have to know is that the PayPal transaction, but also a Visa or MasterCard transaction, at the end, it's still a direct debit. So you saw the prices there about 5 cents or 10 cents, depending on the country. Well, you have to know that PayPal is the biggest direct debit player in Germany because they collect all their PayPal amounts, they collect it with direct debit at the end. But they pay an extra premium price because of the extra service they offer. Same thing for Klarna, which is a buy now, pay later solution. It's also based on direct debits. It's more expensive, but it offers, like PayPal, it offers some extra guarantees on the transaction amount. But if you're doing large amounts in a B2B context, well, it's not really advised to use those types of methods. Can you go to the next slide?
Yes, sorry, I was on mute.
Yeah.
So thank you, Dominique, for explaining the direct debit past and future. So what we really would like to do now is take you back into the order to cash process, go process by process and show you how direct debit can elevate that process. Dominique, go ahead if you would like to say something about direct debit and Peppol within the invoicing process.
Yeah, so one of the major processes that will be changed in Europe is if you deliver an invoice in a B2B context, then you have to use an electronic invoicing solution. So in some countries, it's called PEPPO. In Italy, it's called another protocol. Well, one of the things we see evolving, and we see now already a lot of players doing it, is they switch to direct debits for the collection of those invoices. It's really a match made in heaven, because at that moment you send your electronic invoice, you launch your payment transaction automatically. Well, that works very fine because you don't have to follow up the invoice at the end. So that's one of the major revolutions we see related to the invoicing part itself.
All right, thanks. So I can only imagine that all of you are creating and sending invoices to your customers. In fact, it's a crucial business process, right? So once sent, you want that invoice to be paid. And I think it's fair to say that a direct debit can help you get paid faster, but it also makes it much easier for your customer to pay, creating a smoother supplier-buyer relationship. So imagine having direct debit as a payment option for your B2B customers. Traditionally, a mandate, which is necessary for direct debit to work, as Dominique mentioned, traditionally a mandate is signed on paper or at least by, let's say, requesting a mandate via email. So what if you had within your process the opportunity to move away from that manual process and move into a fully automated one? Which also makes it much easier for your customer to sign a mandate, but it also helps your team to recognize customers that while trying to sign a mandate, they paused or they canceled. And now you know about it because you get this information directly sent to your team if one of your customers tried to sign a mandate but didn't continue. It creates a certain low-hanging fruit for your team to reach out and assist to the customer, well, to reach out to the customer and assist the customer signing a mandate anyway. And I think this is very important that if you bring direct debit into your order to cash process, each time you reach out to your customer, whether that is sending a new invoice, whether that is perhaps later in the process, sending a statement or a reminder, you can easily add information about direct debit. You can easily add certain links or buttons like, hey, dear customer, please click here to create a new mandate. You will help them making the transition from paying by bank transfer, cash, or any other payment method to the direct debit. Again, making it very easy for your customer to pay. Once a mandate is signed, not sure if everyone here today has experience with that, but traditionally, we see companies going into the ERP, downloading information, downloading a report, perhaps the BI environment is part of that, uploading the file that we have from the ERP into the bank environment. Someone needs to log in into the bank environment and sign it for the actual transactions to run. Tweaky created a way to fully automate that process as well. So no manual work or anything is required to get your invoices paid on due date. We only need to know, Tweaky needs to know, that the invoice is there, it's new. We need to know the due date and automatically all transactions are ran. So your mandate is applied if you have one signed. Result, invoices paid faster, a better experience for your customer, and I think an often forgot aspect is that it's also helping your team to work smoother, enjoying their work more. I can put it like that, because they don't have to do a lot of administrative tasks and they can focus on the customers that actually need attention. Now, I do acknowledge that most people think that direct debit is especially for smaller B2B customers, maybe B2C, especially with recurring business. But also for larger customers, there is a solution. So whenever you get in touch with your customer, like I said, an invoice or a statement or a reminder, let's give them the possibility to create a direct debit mandate. And if they don't want that, let's give them the opportunity to make a one-time payment. And whenever one of both is used, let's make sure that you and your team get a remittance file with all the payment details, which invoices have been paid by who and when. Making sure that whenever you add direct debit or one-time payments to your invoicing process, it's super easy for both your customer and your team to follow up on all payments, and also to apply those payments correctly on the invoices, resulting hopefully in a higher match rate. Obviously, once we've sent the invoices, we hope the customer actually pays. If they don't, then we're flowing into the process of credit and collections. And like I just said, when sending reminders and statements, adding the same options to pay one time or via direct debit to those letters and emails will increase the trust of your customer in your payment methodology. They will always have the same user experience. They will always have the same user interface. It's always the same, whether they click a button to pay in the invoicing process or whether they click a button in an email or letter sent in the collections process. And for me, one of the crucial parts of collections in combination with direct debit is that you can easily follow up on rejections. A rejection happens due to, well, several reasons actually. It could be no funds on the bank account, which we know about like immediately. Or perhaps a customer is withdrawing a payment, which can literally happen within days, maybe even weeks after the initial payment has been received, depending on the mandate type. So taking into account these rejection reasons and act upon them, it's all part of the order to cash process as well. And ideally, a workflow is set up based on your rejection codes, allowing your team to act swiftly when certain rejections occur, or do nothing when other rejections occur. And you know what? If there's no funds, we're gonna retry automatically within X days, or we're not gonna retry, and we're going to put that certain customer in a segment that says failed or rejected direct debit. Now we're gonna send a certain letter that says, dear customer, I'm so sorry to notify you that your direct debit transaction has been rejected. Please use this alternative payment method to pay your invoice. Again, same payment button with the option to reactivate the direct debit or to use a one-time option if they choose to do so. An interesting addition to that is that if you give your customer the possibility to click certain buttons in an email or a letter, we can also use that for other processes within your order to cash as well. Let them raise a dispute. Let your customer easily reply on a copy invoice, or even let your customer create a payment plan or a payment promise. And when we're talking about payment promises and payment plans, we actually have users that within their order to cash process, they say, you know what, dear customer, you are requesting a payment plan. We allow you to have one, but we want you to sign a direct debit mandate so we can collect the installment amounts on the agreed installment dates. In general, whenever we talk about collections with existing or new customers, we will always talk about segmentation. For me personally, that is the most important start for optimizing and elevating your collections process. And a lot of you and a lot of customers, they think about key accounts because sales says they're very important, and probably they are. You have intercompany, you have larger customers, smaller customers, medium customers, based on risk, etc. But let's not forget that the payment method, in case of direct debit, is also a key element which you can take into account when thinking about segments. Because why would we send a statement every month, or why would we send a dunning letter or reminder a few days prior to due date if we know we're collecting on the due date anyway? based on the direct debit mandate. So once again, use direct debit in your favor. It creates transparency throughout your organization. It creates remittance information for you to know which invoice was paid or not. And it allows your customer to create and make payments easily. So I want to talk a bit more about this remittance file that we're creating. Whether a customer is paying via direct debit or paying via a one-time payment, within the process, you're immediately aware of the fact that there's a payment. You know which invoice was paid by who and when, and this information can be automatically transferred throughout your process immediately into your cash application process, allowing your cash application team to apply the payments on the correct invoices at once, higher match rates. We can also make sure that when we run a direct debit transaction, it's a very good idea within your process to share that information with your collections colleagues, team, system, whatever you're using, allowing your collections team not to send any reminder statements or dunning letters anymore because this invoice is going to get paid. Dominique told me last week that apparently when we're talking about direct debit, 99% of the invoices are getting paid right away. And Dominique, if I say things that are incorrect, please correct me. But I do remember that you said, even with the retries, we're getting towards a 99.8, 99.9% payment ratio,
Yeah,
which
that's correct.
personally, great. So, which personally I think is great. And like I just said before, again, what I think as, what I think of as an often ignored aspect during process optimization is the work satisfaction of your team. No manual work. Instead of all kinds of tasks, administrative tasks, let your team focus on the harder cases. Let your team focus on the customer that actually need personal attention. Allow your customers to pay super easy via, for example, B2B direct debit, saving your team also a lot of time. Obviously, when you're thinking about the order to cash process and you're thinking about how to apply direct debit or any other payment method within your process, whenever you touch base with your customer, whenever you communicate to your customer, all that information is stored, preferably. That's what Billtrust does. Billtrust can store this information and provide you with a business intelligence dashboard. There's an AI component into it. There's also a lot of figures and numbers you can get out of it yourself based on your own KPIs. And one of my favorite KPIs, if we think about direct debit, obviously the success rate, right? What is the rate of rejections? But also, if we combine direct debit with cash application, what is the number of customers that so far have a 100% manual matching? What I mean by that is a certain customer pays 10 invoices a month, and all 10 have to be matched in our ERP system, payment invoice matching, your cash application process, manually. If that is the case, and the customer comes to you and say, hey, can we do like some additional business? Can we create maybe better conditions, payment term extensions, etc.? You can use this information and you can use this insight and analytics as a basis for discussion to say, dear customer, yes, we love to work with you, but your payments getting us a lot of manual work. How would you mind if we move you towards a direct debit payment method? Immediately, we can do business. You can segment that customer differently within your collections process, but it's also resulting in, again, a higher match rate in your cash application and less manual work. If we talk about direct debits and payments in general, For us, for Billtrust, but especially for me and my team personally, payments is the glue that holds it all together. Payments is the process that comes back in every other step of the way. Whenever we are in an order phase to all the way to a cash application phase or analytics, you want to know about payments. Who paid me? Why did they not pay me? When did they or did they not pay me? Which payment methods do we have? Which payment terms do we have? And all this information can be shared throughout all your other processes. That's what you see on the screen. Payments has a connection with all the other processes, allowing your customer to easily pay. And again, let me repeat myself, to make sure that your team has more time and more quality time to spend on the customers they actually need to spend their time for. Removing all the manual tasks, removing all the administrative tasks. So let me go to the next slide, which is actually the takeaways of today and also Q&A. I see there are a few questions. Let me first, just the main takeaways of today. SEPA direct debit, widely accepted, isn't going anywhere. What we see is that traditionally it has been used for B2C and smaller B2B, but as Dominique mentioned, 80 million euro transactions went through SEPA direct debit in the past few years. So there is a shift going on. We're moving towards the B2B space more and more. It's allowing you and your team to support frictionless payments, seamless payments, frictionless payments. It all means the same, as less activities as necessary or possible. It does empower your finance team, saving a lot of time for tasks they actually need to focus on, reducing their workload in the process, improving their efficiency in the process, and obviously streamlining your order to cash processes with the usage of direct debit. Dominique, I do have a few questions for you. I'm just going to pick one. I spoke about the rejections and the rejection period depending on the SEPA direct debit mandate type. There's a question about this. Could you please tell us a bit more about the different types and what is the difference?
Yeah, there are two types of SEPA direct debits. So now we're talking about the Eurozone. The one type is called a core direct debit, and the other one is called a B2B direct debit. So obviously, B2B is between businesses. A core mandate can be between a consumer and a business, or can be between a business and a business. There are a couple of differences between both methods. The first is the way you need to negotiate the mandate. In the core flow, it's in fact a kind of flow between you and your end customer. So if we get there a kind of digitally signed mandate, then it's okay, and we don't necessarily need to involve the bank. So we as Twiki do more checks with the bank. But in fact, you don't need that interaction with the bank. So it's an agreement between you and your end customer. The disadvantage of that is that you have an 8-week consumer protection on those mandates. But if you don't have a legal mandate, so it's not legally negotiated, then it's 30 months that they can get it back. So with the 8 weeks, it's simply consumer protection. But what you can do is during the mandate process, you can do a couple of extra checks. So usually we don't see a lot of rejected direct debits returning in a couple of weeks. We don't see that. On an average, it's for B2C, and then we are really talking about consumer markets. It's less than 0.1%, and in a B2B context, well, we usually don't see it, except if they really don't agree with the invoice. In a B2B context, So B2B direct debits, there is an extra thing that needs to be done. We support also those flows. On that moment, what we do is we do also, or the end customer needs to do registration at the bank. But it can be done fully automatically, electronically. So that's not a hassle either. And at that moment, it's known at the bank. So the mandate is known at the bank. And if you do at that moment a transaction, it can't be rejected afterwards. It can't be returned, and there is no consumer protection. So once you get the money, that's usually not a problem. So typically, fuel card companies or wholesale with delivery to hotels, restaurants, fuel card companies, leasing companies, renting companies, they all use B2Bs because that's for them the most safe. But if your amounts are not so high, then you can still use the core mandates. But yeah, the large transaction I was talking about of 80 million euros, it was a core. So it's also sometimes based on trust between you as a merchant and your customers. If you don't make mistakes in your invoices and you have a good system managing all those invoices and collections, well, you usually won't make mistakes, and yeah, when the trust is high, then you won't have a lot of problems with the process. But so you can use those two methods, core and B2B, to each other. Some of our customers even say, okay, we do core for everyone, but we saw a little problem with that one. Well, that one we will switch to B2B because they don't have any rights at that moment to get the money back.
All right, great. So thank you so much for attending. Everyone else who used the chat to ask a question, we will reach out to you directly, trying to answer that to you. The webinar was also recorded, so it will be available on the website of Billtrust, and I guess, Dominique, on the website of Twiki as well, perhaps. If you have any questions or whatsoever, please do reach out to us, and we're happy to host you today.
Bye.